Welcome to the WealthTrace Retirement Planner video demo. The WealthTrace Retirement Planner is an online retirement planning application built for both financial advisors and individuals who want to create their own retirement plan. Our retirement planner is accurate, powerful, interactive, and above all, easy to use. But don't just take my word for it. Let's take a look at just how easily you can get started and produce a retirement plan in just minutes. Most retirement planning applications make it difficult to get started quickly or to simply change any assumptions or easily jump back and forth between sections. We have taken the approach where you can get started immediately by having the program guide you through each step in the process. Everything is easily accessible through one page via tabs. Users can easily understand where they are at all times and can quickly jump back and forth between sections. I am going to use the program steps to guide me through the retirement plan. I want to point out, however, that some users may want to hide these steps once they get comfortable with the program. Users who are comfortable navigating on their own can simply jump back and forth between the tabs. Users can also choose to hide the steps on the left-hand side anytime they wish, and then show them again. I've already set up the basic information for a couple, John and Jane Doe. Notice how when I begin, there is a helpful guide above the section I am in. Once I am done with each section, I simply click the Next button and I am taken to the next section. I am now taken to the Settings and Assumptions section where I can change things like the inflation rate, annual expenses in retirement, and tax assumptions. In general, you can leave tax assumptions set to the program estimate, as the program always uses up-to-date federal tax laws to calculate your taxes owed each year. However, you are required to enter your state income tax rate. We now move on to entering investments. I am now taken to the first section for investments. This section is for investments that are either fully taxable or fall under the category of tax-free interest, Roth IRA, or a 529 plan. I have already entered investments for John here. Notice that the program asks for such items as the cost basis and what percent of your return will be from dividends versus interest. This is here in order to maximize the accuracy of taxes and thus your retirement plan. After entering John's investments, I can then hit the Next button and I'm taken to the inputs for Jane's taxable and tax advantage investments. I want to stop for a moment and point out how the graph and calculations below have already been populated. With each step, you can watch your retirement plan change in front of you as you add more information. I will now add any taxable account information for Jane, which I've already entered, and then we can move on to qualified tax-deferred investments. Qualified tax-deferred investments include 401k plans and any non-Roth IRAs. I've already entered 401k plan for John, and I've entered an IRA plan for Jane. We then move on to non-qualified tax-deferred investments. These are investments that are generally reserved for annuities, where money can grow tax-free. Unlike qualified investments, however, the capital gains on these investments are taxed when the holdings are sold. We have an annuity entered for John. We'll assume that Jane does not have an annuity, so we'll move on to the next step, and this is Social Security and pension payments. For Social Security payments, we highly recommend that users get an accurate estimate from the Social Security Administration website based upon their actual history of income. For those that want the program to estimate their Social Security payments, they can check the Use Estimate checkbox here. We can now move on to the Additional Cash Inflows section. This is where you will enter any cash inflows that aren't handled as a typical investment. Examples include the sale of a business, insurance proceeds, or expected money from inheritance. I have added the sale of a business that will occur when John retires. I also entered the assumption that Jane will work part-time during her retirement for 10 years. Next is the Additional Expenses section, where we can enter non-recurring expenses that weren't already inputted in annual expenses in retirement earlier. Examples include paying for a child's college education, long-term care insurance, and buying a vacation home. I added one expense for college education. Notice that I put in my own inflation rate of 6% to more closely match the real inflation rate of college tuition. Now we're finished with the basics and we can view the retirement plan numbers. Notice that when I click Finished, I receive a nice message telling me what I can do now that the basics of the retirement plan are complete. Let's now take a look at the graph below and some very important calculations. The graph shows you just how your expenses are paid for starting with the year of retirement. It also shows you when you run out of money, represented by the shortfall in red, and how much the shortfall is each year. You can hover your mouse over any bar in any year to view just how your retirement is funded for that year. You can also see how much a shortfall might be in any given year by hovering your mouse over the shortfall bar. Perhaps most important of all is the information nicely summarized below the graph. Here we see the total investment amounts available at the retirement age of both John and Jane. We can see the age of both John and Jane when the first shortfall occurs in retirement. We also can see the average 10-year shortfall represented in today's dollars, or put another way, the average amount this couple is short on funds adjusted for inflation such that it is stated in today's dollar terms. Unlike most retirement planning applications, we put these important numbers front and center so you can view them at all times. You can change assumptions and settings on the fly and watch your outputs change in real time. You won't have to spend time digging for your answers as to when you will run out of money in retirement. Looking above the graph, we see three sliders where we can change the age of retirement for both John and Jane, as well as the recurring expenses in retirement. We can move the sliders for retirement age and recurring expenses and watch the graph and outputs change below in real time. These easy-to-use interactive sliders make it simple for anybody to watch their retirement plan change on the fly as they change these important assumptions. Quickly and easily finding out when funds will run out in retirement and by how much are the most important aspects of retirement planning. Armed with this information, we can now figure out what this couple needs to do in order to push out the year when they will run out of money. For those who have seen enough and want to get started, I welcome you to sign up for a free trial. For those who would like to see the additional features of the retirement planner, such as running scenarios, vectoring inflation and returns through time, and our reporting capabilities, please continue to watch the demo. Let's take a quick look at the Data tab. Here the program outputs all the important inputs and outputs used when generating the retirement plan. We don't take a black box approach. We want users to see the inputs and outputs over time that generate the retirement plan numbers. We also highlight the year in yellow when each person retires. The first year in which there is a funding shortfall is highlighted in red. I now want to show a feature that is only available to financial advisors. This is the ability to vector inflation and total returns. Many times it is inaccurate to assume that inflation or total returns will stay at a fixed number forever. For this reason, we have given advisors the ability to change inflation and total returns to any number they wish during any year. There is a special syntax for doing this. I will show an example first using the inflation rate. Instead of 2% for inflation, we can type in a vector. If you hover over the label for inflation, it gives you a helpful tip on how to do this. So we can enter a vector like this. We can say 2% until 2020, then 3% until 2030, then 4% thereafter. Same thing for total returns. The syntax is the same. You can vector total returns to any number you wish in any year. Now let's look at what is perhaps the defining feature of this application: scenarios. No other retirement planning software offers the ability to use intuitive scenarios to quickly home in on the solution to your retirement issues. Let's say that this couple wants to play it really safe and does not want to run out of money until John is at least 140 years old. but they don't know how to get there. Our scenario capabilities provide the roadmap to get to many, if not all, of your retirement goals. Let's take a look at how this works. I have already entered 4 scenarios that will help us figure out how this couple can extend their funds until John is 140 years old or even later. I have increased the retirement age of both John and Jane by 2 years, as shown here. Note that I can apply each scenario to only one person at a time or both John and Jane at the same time. The scenarios I've entered are the base case, changing the retirement age by 2 years, reducing expenses by 5%, and a combination of the above. As you can see in the scenario outputs, it is the combination of increasing the retirement age and reducing expenses by 5% that will get this couple to their goal. In fact, given the other assumptions entered, they will now run out of money when John is 148 years old. In other words, they'll never run out of money under this scenario. I also want to point out a feature that no other retirement planning application has. This feature is called Generate Ideas. Here the program will run multiple scenarios for you. It chooses variables that are most in the user's control, such as retirement age and savings rates, and maps out just how much of an impact changes in these variables will have on your retirement situation. Let's take a look. In this section, the program shows users a variety of ideas as to how they can change their retirement situation. In this example, you can see how changing John's retirement age impacts when the first shortfall occurs and the total investment value at John's retirement. We also give a nice detailed description below about what the data is telling you. Finally, the program shows in nice graphs how changing the retirement age impacts this couple's retirement plan. The program does the same thing for Jane, and then for both clients at one time. Let's now take a look at the reporting capabilities of the application. The report is automatically generated each time a calculation is run. Our reports show all the important information, including assumptions, settings, and outputs, including all the scenarios and all the outputs from Generate Ideas. Users can also enter notes about the retirement plan that will show up on the first page of the reports.